Welcome to CoreLogic's update on the housing market for May 2016. At the start of this month, we've seen another cut to the cash rate, taking official interest rates down to a new historic low of 1.75%. With most of Australia's largest banks passing on the full cut, we're likely to see the typical standard variable mortgage rate for owner-occupiers slip to approximately 5.4%. Australia hasn't seen mortgage rates this low since July of 1968. Whether lower mortgage rates will stimulate the housing market enough to see a rebound in the rate of capital gains is yet to be seen. However, with lending criteria having tightened through 2015 and lenders even more vigilant around housing market risk, we aren't likely to see a substantial rebound in the rate of capital gain, which has been broadly trending lower since mid-last year. Despite the moderating trend in the rate of home value growth, capital city dwelling values are up 1.7% over the month of April, which is a sharp rise from the negative results recorded over the final quarter of 2015 and the relatively soft growth conditions seen over the first quarter of this year. The latest monthly data takes capital city dwelling values 3.3% higher over the first 4 months of the year so far. Growth in dwelling values over the first 4 months of 2016 has been broad-based, with Perth the only city where home values haven't recorded a rise. Values are down by 0.5% in Perth so far this year, while the highest growth rates have been in Sydney and Adelaide, both up 4.5%, and Hobart values are up by 4.4%. The longer-term trend still shows Perth and Darwin to be the only capital cities where values are lower over the past 12 months. Darwin dwelling values peaked in May of 2014 and have since fallen by a total of 6.2%. Perth's market's been more resilient to a correction, with dwelling values falling by 4.2% since peaking in December 2014. Melbourne's showing the highest annual rate of growth at 10.1%, and it's the only capital city to record an annual growth rate in the double digits. Capital cities that have underperformed over the cycle to date and have generally shown a healthier affordability and yield profile appear to be gathering some momentum, with Brisbane values moving 6.2% higher over the past year, while Canberra, Hobart and Adelaide have also seen an improvement in capital gains. Transaction volumes are painting a softer picture of housing market conditions though, with the number of home sales drifting lower over most capital cities. Year-on-year sale numbers are down nearly 16% across the combined capital cities, with the largest falls being recorded in Darwin, where annual home sales were down 25% compared with a year ago. Sydney transactions were down 15%, Melbourne by 14%, and Perth also down by 14% compared with a year ago. While values continue to broadly rise, rents aren't doing much at all. Weekly rents were virtually flat over the first 4 months of the year, and they're down by 0.2% over the past 12 months. The fact that rents are being substantially outperformed by values has continued to push rental yields lower. In fact, both Melbourne and Sydney are once again seeing gross rental yields at record lows. Hobart's now the highest yielding capital city after Darwin slipped down from the #1 position due to large falls in weekly rents over the past 12 months. As we approach the federal election, which is likely to be held on July 2nd, housing will continue to be a key topic of debate. The latest federal government budget announcement had no changes to negative gearing or taxation policy related to housing, which is in direct contrast to the Labor policy, which is to allow negative gearing on newly built properties only, as well as halving the capital gains tax concession from 50% to 25%. As always, CoreLogic will be providing the market with insights and analysis based on statistical evidence and facts which will hopefully help to guide the housing debate in a positive direction. Thanks for tuning into our monthly housing market update. Remember, you can find more detailed analysis and commentary at our website at www.corelogic.com.au.